Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Gabriel Yap, Executive Chairman of GCP Global. Gabriel, it's always great to have you on the show the day after the public holiday.
Oh, yes.
Now, Gabriel, let's take a look at how markets are performing before we get your insights. Now, Bursa Malaysia is at 1,582.52. It's up 0.31%. The SGX is at 3,114.54. It's down 0.28%. Now, overall at the Nikkei, it's up 2.23% at 28,058.24. The Shanghai Composite is at 3,471.17. It's up 1.21%. The Hang Seng is at 27,981.51. It's up 0.95%. ASX 200 is up 0.75% at 7,034.9. And rounding off the numbers, we've got the Kospi, which is up 0.76% at 3,145.73. So largely, Gabriel, sea of green across the region. Why is this so?
Well, I think essentially, Brian, coming off from the last couple of weeks of sell-off, I think this week is a very interesting point because the Dow, after, or in more essence, actually the Nasdaq, when it hit 14,000, it's sort of like pulled back close to 800 points. And then within this week, you actually saw that on an intraday reversal, that's particularly on Wednesday, that happened on the Nasdaq. So essentially, the days in which the FANGs have released their results, that is actually your Facebook, your Alphabet, your big tech stocks, the share prices continue to inch downwards. That was continuance from last week. So this week alone, you're actually seeing some signs of, tapering off of the selling, which I hope could then be the linchpin, of some broad-based buying coming back into tech in the US in this instance.
Now, Gabriel, there was the Nikkei has been down over the last couple of days. However, strong rebound today. Any particular reason why?
Oh, yes. I think there's been some market talk that essentially the Ministry of Finance in Japan is actually starting to buy back some of the ETFs. As you know, Brian, the Japan's Ministry of Finance is actually a very strong buyer and actually owns more than 50% ETFs in Japan market. Yes, more than 50%. So it's not surprising that the market's actually taking its cue when there's actually some order flows that seems to indicate that the Ministry of Finance is actually helping to support the ETF market and hence the Japanese equity market. And of course, this is also coming on the back of after several days of selling, as we just mentioned, which has actually brought the Nikkei to another inflection point of support.
Now, I want to move on to China and talk about Alibaba. Now, they just posted their first loss. And today it has fallen 4%. Now, how are you viewing this? Is the worst over for Alibaba with the payment of the fine, or is there a lot of uncertainty still around Alibaba?
Yes and no, Brian, because there are a couple of things to read into the results. First, the results actually was missed, in terms of the revenue, profitable revenue, as well as actually the earnings that came through. As you know, they registered the very first earnings loss. So if you look at net profit for this set of results, may not be relevant for comparison. But if you look at the EBITDA, then you will actually see that the EBITDA did not come in line or close to market expectation. It was just a notch below. But more so, when you actually look forward to this set of results for this coming year, Alibaba has actually guided that they will grow revenue by another 30% to 930 billion.
Sorry, well, I didn't hear you clearly. They grow revenue by how much, Gabriel?
Grow revenue by 30% to 930 billion. Sorry, it must be the thunder from the rain. So the market participants right now actually are quite surprised that despite a good guidance on the revenue side, it's one of the rare times when they actually give guidance on revenue for the coming financial year. But the market actually still sold off stock quite substantially last night in Wall Street, as well as continuance in Hong Kong today, simply because the guidance on EBITDA is being feared upon continual spending on what we call community group spending. As you know, Brian, I mean, its other competitor like Meituan just recently raised $10 billion, for community group buy. The likes of JD.com has also and continue to invest, heavily in community group buying, as well as actually newcomers like Pinduoduo. The premise now is that it seems that Alibaba is not raising new money. Instead, they are actually using the operating cash flow to finance its new investments in community group buying, which will be a competitive market, which means that the revenue may grow for 2022, but the growth in EBITDA may not be able to match the revenue. So that is the greatest fear.
Right. So that's the fear.
Yeah. So that's the downside. The good side is that I don't know, Brian, if you had taken a look at the new Alipay app just recently, you notice that Alipay, despite being fined 2.8 billion just because of the offenses that they have negotiated, seems to they're worried to be over because Alipay is the very first e-commerce site that's actually authorized by the Ministry of Finance to actually allow it to distribute digital currency. As you know, China has actually done its digital currency distribution via the 6 SOE banks. Now, if the ecosystem of Alibaba or Alipay has actually incorporated Ele.me, which is actually the other functions, Fresh Shippo, which is the supermarket function, as well as Taobao. So this allows digital currency issued by the central bank, administered and helped, to be distributed by the 6 SOE banks within the Alibaba and Alipay ecosystem. I think this is something that's very significant because everybody is still boggling down on the $2.8 billion fine and worrying that more measures. But if anything, this is an indirect or implicit way where the authorities are actually recognizing that Alipay is the dominant player and is the only internet platform right now that's allowed to do digital currency outside the governmental platforms.
And Gabriel, that's a very good point. As you said, it's a tacit anointing and saying, okay, it's all over. We are continuing to work with you on new projects. And this is being one of them. This is being obviously a very important one.
Indeed, it's a national objective and priority.
Now, Gabriel, what's then the outlook for the rest of China's tech sector in terms of earnings?
Well, I think the reading basically based on the share prices, that's been hammered down yesterday. Like Pinduoduo was down 7%, JD.com was down 4.5%, Bilibili was down 7%. Bilibili has a 23% contribution coming from e-commerce. So they are affected by all this development. I think the reading in the market, as you know, we basically size through the facts for you. We make sure that the data becomes important information for investors on your program. That's where we actually add value to one's understanding of investment. So essentially, the fact that the new drive from live streaming into community group buying, which was actually pioneered by Pinduoduo, would seem that many of the big players, including Alibaba, Fresh Shippo, as well as actually JD.com, has to commit new committed money, even like Meituan itself. So it will be a heavy investment initiative, which may take 1.5 years to play out. It will be highly competitive, but it will be lucrative, of course, not in the short term, but in the long term.
Now, Gabriel, thanks again for coming on the show.
Thanks, Brian. Have a good weekend ahead.
Yeah, we've been speaking to Gabriel Yap, Executive Chairman of GCP Global, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Please check out our LinkedIn and Facebook sites, as well as our website, www.biztech.asia. Please subscribe and like our various platforms. Thanks for tuning in.